Yeah, I'll say this, right? So in our 10-year history, you've seen us talk about it. We took on a lot of, we took on risk, right? We took on heavily vacant properties. We filled them up. We refinanced them. And, we delivered some pretty outsized returns. We think right now investors are really worried about risk mitigation, right? And I think they should be. We're in a situation now that you just read the headlines. There's a lot of things going on, and I think there's nothing wrong with a mid-teens return. There's absolutely nothing wrong. In fact, there's the stock market can't give you that. I don't know if the stock market can give you half of that right now. And in fact, you could say, if you're in the stock market right now and you just got into it, it could be trouble. So, I'm sure people, they hear 25 and maybe that's better than 15. But if the 25 has a risk variable against it, especially with the capital market state we're in, maybe some political risk we're in right now, there is absolutely nothing wrong with 15%. 14 to 16 is what we're targeting in the fund right now. And you have grocery anchored, call it grade A real estate that lenders, no matter what's going to happen in the market, are going to prioritize. You have industrial properties you're not going to get that return on. And cap rates have gone down on multifamily, and you have some of those issues that we've talked about. So, this really is a gold standard real estate right now. So, if you could just plug that in and you're risk mitigated against it, we believe, as an outfit that has really gone for more of the value creation, a little more risk, a little more reward, especially in the Sun Belt now, where vacancies are much lower, right? So the opportunity to create that value is not there unless you really go out into areas we don't like, more rural or more northern, where you're more fraught with much higher risk profile. This is just a nice, steady, and again, there's nothing wrong with 15% returns. If anything, you have to put a little more risk to get even a 15% return.
Yeah, and when you get, you see it out there. And you see 25, 30% IRR, 40, 45% IRR. I like to think of that as catching lightning in a bottle.
Yep. Especially in 2025.
And you can only catch lightning in a bottle once, twice.
Yep.
And then you keep on trying to chase that. Yep. And you start getting a little more desperate.
Yep.
And that's when you kind of see, unfortunately, bringing it up with the fund, that's when you see the bad actors come out. And our investors read it. If you're listening to this, you've seen the bad actors in funds. Mm-hmm. You've seen them a lot in Florida over the last 4 or 5 years, just because those funds probably started off with great intentions. But as all of us are, we're beholden to our investors. And when you promise these outrageous IRRs and you're not getting it, that's when you start cutting corners. And you maybe start doing things that aren't above board. And you get caught. And unfortunately, it makes our business a little harder in speaking about because of the bad actors out there.
Well, and I think it also goes back to I say this all the time. I'm in a multifamily fund. All disclosure, and I've been in it since 2015. And the first 5 years were great because that was the blowing and going times for multifamily funds. My IRR was 40%. Last 5 years, it's probably negative, and I haven't had distribution in 4 years. So we don't want to be that kind of fund, and we want to have. And we're in our lockup. We're giving people the opportunity to exit if we aren't providing the value. But I don't think that's going to be the case.
Well, so if I'm sitting here, I can get out of this fund. I'm not locked in.
Yes.
Well, explain that.
Yeah. So basically, we're going to have a sliding preferred returns schedule. So if you only stay in 1 year, you go 5 pref. If you stay in 2 years, you have 5.5. And in 3 years, you have 6. And we're doing a reserve allocation, basically, so you can exit. Yes.
Okay.
You can sell your shares. It's all going to be completely tokenized. So you can do that on a secondary exchange if you want to do it as a digital security. And, that's in Reg A. You can transfer your shares as well. Or we create a reserve so we can actually buy them back.
Right.
So in talking, we heard investors big and small, call it from the accredited investors down to the non-accredited. That's their biggest fear, being locked up, not having liquidity.
Well, you've been locked up for 10 years.
Like I said, right? And it might be another 10. You were on the call last time I had with this fund.
That was 3 years ago. And
and there was no end in sight.
But I think that's something which I like to think when we started this was going to differentiate ourselves from that. And focusing on transparency, focusing on being present for our investors.
That's right.
I don't think you've got an email from your investor relations person in 3 years, have you?
Nope.
You've gotten some quarterly reports.
I get some quarterly reports with some numbers, but those numbers don't mean I get a distribution.
Yeah. Yes. So I think that's something that we really want to focus on, whether you're investing $5 million into our fund or you're investing 20 grand into your fund.
Yeah.
We're gonna be there for our investor no matter what they're investing, and we're gonna be present for them. And we're gonna pick up the phone and be transparent. And hopefully in that transparency we're saying all great things, but also sometimes things go bump in the night. Pipe breaks. Yeah, we just spent 15 grand. That was not budgeted. It happened. This is what we're going to do to try to remedy kind of that shortfall in cash flow for this quarter.
And there's so many ways to tell a story now. I think the video storytelling is very easy right now. I mean, we're on these sites. It's really easy to just put it up. We've got a great platform that investors are going to be able to invest through. They'll have everything through that. And, if they want, they'll have as much or as little as they want. If they want to come to it and see the videos, as you say, we'll get as discreet as that or not. But, I mean, that's going to build the community. And the community builds, hey, look, maybe I started with 50 grand, but, I like how things are going. Maybe I'll put another 100 grand in there. Or, hey, maybe I do need the cash back now, right? Yep. We want to have that optionality, and that's somewhat of a big risk as an issuer, but that's what we heard without fail.
Yeah. That
people want that.
Yeah, and let's just talk about the ways the investor can invest money into it, whether it's through your IRA, through your 401k, and the new thing now is we have crypto.
Yeah,
is starting to broach into the space.
Yeah, great question, right? So we really believe in, and we've had a number of self-directed IRA investors over the years, and we're going to make that really easy, right on the portal. You can invest. I think that's still a fallacy for a lot of Americans, and credit the big IRA shops for beating the drum and saying, hey, look, you can only use stocks and bonds in your IRAs, but you can use gold standard commercial real estate, and you could beat the returns you're going to get from your stock portfolio. So we will, we will enable right on our investor portal, being able to, if you don't have a self-directed IRA, you'll be able to create one right there on the page within minutes. You'll be able to allocate from your existing IRAs or 401ks right into a new self-directed IRA and invest into the fund from IRAs. Crypto, we have a relationship with Alt5 Sigma, which if you look on the news lately, has got a lot of fanfare and new investment from some pretty big names. You'll be able to buy crypto. You'll be able to invest with crypto. Basically what happens is if you're investing with Bitcoin or some other kind of crypto, it will basically freeze that rate. It will be pressed down to fiat. Obviously, we can't buy commercial real estate with Bitcoin, but it will take that price and basically convert down to fiat. And then we're working on not now, but downstream, basically even taking distributions back to stablecoin, and then you can convert back to Bitcoin. That's something as a global company. There's a lot of stablecoin global mechanisms we're using in our Dubai business right now. We really believe doing transactions on the chain, doing transactions across stablecoin. This current administration is very big on that. And I think that's going to be a real equalizer in the future. And as a technology-enabled company, that's something we're really into.
Yeah. And again, what we're trying to do is be as forward-facing as possible with how we evaluate our returns, how we evaluate properties, is trying to be as forward-thinking as possible, and also making it a little more accessible for people to get into real estate. Because you talk to a lot of people now. Well, how do I get into it? I don't know how to get into it. I can go open up a Coinbase for crypto, or you go do Robinhood, invest in stocks. But a lot of people don't know how to invest in real estate. And you should have a diversified portfolio. You should have some stocks. You should have that. But also, you should have some commercial real estate there.
35% of your portfolio, every financial advisor says 35% of your portfolio should be in real estate. Yeah. And last time I checked, residential real estate's tough to time the market on. So that's so just call that commercial real estate
on residential. I don't know how to get into it, so that's probably a good thing.
That's probably a good thing. Yeah. But, I've heard a lot of stories since we really launched the Reg A, and I'm proud we're doing this. It's going to be, a little more diffuse, but I think we've got a good group that has done this several times for us. But if we can democratize this a little bit, I've heard a lot of stories about, hey, look, my wife's a yoga instructor. She has $15,000. She wants to get in commercial real estate. This is great stuff. And if we can, Helena said it earlier, right? If we can learn, if they can use these returns to pay for rent, pay for necessities, that kind of thing. I mean, that's good cash flow. On a $10,000 to $20,000 investment. That's just continued cash flow coming off.
Any type of tax benefits?
Yes, there are. This is important, especially as we launch the fund here at the end of the year. If you're a real estate professional, as defined by the IRS, basically if you work 750 hours a year, and we'll disclaim this as check with your accountant, but basically that means if you or your spouse put forth 750 hours a year, which is not a lot of hours when you really kind of think of how many hours there are in a year, we can give you depreciation basically on the properties that we buy. Basically, we use a very advanced method of what we call accelerated cost segregation, accelerated depreciation, which in your K1 usually yields a negative number that you can offset gains. So that's very important to think about as we're coming to the end of the year. You might have gains that you want to offset with negative depreciation. That's something we have offered to our investors throughout their life, and they've been very successful with it.
So that's 750 hours over 52 weeks. So that's probably what, 12, 14 hours a week. And it could be any real estate. So if you have a significant other that's a realtor.
Who's a realtor? There you go. And you filed jointly, then you are a real estate professional.
Yeah.
Exactly right.
Right. Mm-hmm. Or if you're a contractor. Same thing.
Same thing.
Mm-hmm. Tradesman. You're doing real estate, right?
Mm-hmm. That's right.
So,
I mean, we're talking about real estate right now. We obviously real estate professionals, but we're putting in our hours.
Yeah.